you say, hey, giving up on silver because it's manipulated, we refer to some of the conversation we had in the past. This thing will just make the technical level so much more more relevant.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. In another wild week in the silver market, lots of volatility, and fortunately, in a world where a lot of investors really struggle to handle that. Quite honored to be here with my friend John Lee of Silver Elephant Mining. John, you have quite an interesting background in a variety of fields, not of course including silver, but handling volatility. So perfect day to have you on here to discuss what's going on in the silver world, get an update on your projects. And with that said, happy holidays, my friend, and welcome on in. How are you doing today?
Same to you, Chris. Good to be back.
Well, it's a pleasure to have you back here. And John, especially as someone who put a $32 price target on silver back in June when it was 18 bucks, then we saw it go up to 29. And I know people really enjoyed your last update. So as we are recording today, Tuesday, December 22nd, couple days before Christmas and the end of the year, what do you make of what we saw the last 2 days here? Opens, spikes up $1 on the open, drops 250. I mean, this was pretty wild. Today, it's getting beaten up a little bit, down 64 cents. Again, we did see a rally last week, so love to hear where you see all this shaking out right now.
Yeah, well, Chris, what we see on a Monday was no different. I mean, it's a bit deja vu. There's a lot of similarities, but no movies played the same twice. You have a Monday sort of an Asia market, not a lot of volume, but it's above average volume. Took the silver to 27 and a half, which is a bit of a resistance, and then before it came crashing down. This is a bit of sort of deceptive and a little bit of it's not very convincing because silver is going with the rising dollar. And so that was a bit strange, and stranger things has happened before. As we talk repeatedly, we're not talking so much the way manipulation, but you do have some actors in the market that are not exactly profit seeking. So if somebody want to go in for a kill in shorting, sometimes they would let the market sort of do its sort of natural course, which is buoyant for silver before they convince their rating operation. I think which is what happened. However, I think, Chris, this is not so much particularly cornered to just or related to just the silver market. If you look at overall, a lot of the different markets, and as you know, Chris, I really study sort of the intermarket relationship because in the end, you got to follow the money. Given that there's no yield, that you're literally just speculating, right? Going from one place to the next one, is that there's a lot of the market that has reached a saturation point. So if you look at the NASDAQ, it's reached a saturation point, and the S&P to valuation, there are nosebleeding territories. And you have the dollars gone from 105 to 110 to like now it's less than 90. That's a 15% correction in very short order. And then you now have uranium and platinum and WTI. That's almost $50, and half of the world is locked down. So I think a lot of the markets now reaching saturation point. The band can continue to stretch. Doesn't mean that an imminent correction is on the horizon, but we can expect a lot more volatility, a lot more volatilities. Going forward, just a real quick a minute on the subject of forecasting outlook, Chris. We talked about the premise and my thesis is back in July and throughout the subsequent months leading up to today, Chris, with a number of 3 or 4 interviews with you, it's all about the dollar reaching 88 and correspondingly silver a breakout $30 to minimum 32. Well, we got almost one end of that correct, right? The dollar went from 94, 90, 92, 90, and to below 90 a few days ago. I think it's 89.5 whatnot. So I was right on the call, but the silver was a letdown. There's no question about it. And you can attribute that to a number of different reasons. But I do think, again, there is some influence with the power, the divining power that are at play. With a $3.50 copper, with a $50 WTI, with a $90 Dixie, you should be looking at 2,000, 2,100 gold. And for that, you should be looking at $30, $35 silver. That is not happening. So I just put out a few tweets this morning before the crash in silver. Silver was 26.5 when I put out the tweets. And I say, look, the silver is going to break out the dam of 27.5 to 32 within the next literally 4 weeks. Otherwise, if the dollar were to catch a bid and strengthen, we could well spell the sort of the bull market for silver in the intermediary term for the next 2 to 3 months. Because I don't see, while it is possible, everything with probabilities, while it is possible that gold and dollar go up in tandem, but it's very rare. And so you don't want to be bucking against the rising dollar. And so, if the dollar were to sort of stabilize 90 and start going up, and if silver doesn't catch a bid and climb over 30, you could be looking at 22 to 27 in up to Q1. All in said that, though, Chris, I don't have a lot of high confidence level in these calls. A lot of that also is going to be hinged on the election outcome in January, which to have a couple of major dates. And I do think that there's a lot of volatility because the players are uncertain. They don't know, right? Some guys are very bullish. They're panic buying, and some guys are very bullish and they're bearish and panic selling. This is not just silver. There's equities and all across the board. So I think things are going to settle down a bit. I think the cards, we play poker, the cards will be shown January 20 and see which way the wind blow at that time. But before January 20, I think we would expect to see continued volatilities.
Yeah, well, that would certainly make enough sense. John, a question I get a lot, I'm guessing you get it a lot too. It's like, on one hand, everything you're saying makes sense. And here we see yesterday's headline: Congress approves long-awaited $900 billion COVID rescue package, overcoming months of gridlock. Yet our Congress, they heroically came together to lodge us deeper into debt. But I mean, it's like people see this, and I think more and more are getting that this money is going to be printed, yet it's like silver makes sense why it should explode. And I think the question that a lot of people voice is, well, why would I invest in this if it's manipulated? Maybe it's never going to end. It's going to go on forever. What would you say to people that are wondering that today?
Yeah, Chris, we also touched on the fate of the silver and the fundamentals driving the silver market. And I commented that it's not so much the QE that's making a difference, but these continued printing from the physical side that are really giving people second thought about investing the dollar. Just real quick on this 900 billion, is really disillusioned with that. Average American got $600 check, and yet is assigning $1 billion in Sudan and 800 million in Egypt, and even to Venezuela, for God's sake, right? Of course, there's somebody's contract to build a bridge with American contractors, of which whatnot. I would say this, Chris, in the long term, the market is a weighing machine, and in the short term, it's a voting machine. So when you can have the commercial that come in and drop a 10,000 contract, it could basically determine the price of the day for silver or in the weeks to come. You say, hey, giving up on silver because it's manipulated. We refer to some of the conversation we had in the past. This thing will just make the technical level so much more more relevant. So imagine like three gorges dam. So water level is going to continue to build because there's a physical demand on silver. And sooner or later, when the important technical level gets breached, the commercial shorts have to retrieve and cover. So think of it also like the Sansu, right? You lose the battle, but you win the war. So in the meantime, as I put on the Twitter, you can search Silver Elephant John Lee. It's my advice. I'm just doing for myself. I do have silver contracts. I have 20 and I just have it sit there. I have an ample cushion, can go to 20 and not get shaken out. But this is not the time that you double up. This is not the time to go hero. Also, just looking at just a general sentiment on the silver bugs. You got companies that are bid up to 100 million market cap without a resource and a drill hole, haven't even put a hole in the ground. And this is very reminiscent of the old days in 2011 when things are company like ATEC, for example, they're $1 billion market cap in Yukon that doesn't have a resource. So I would say that maybe we have some intermediate relief and reprieve for the silver market that could go anywhere from sort of a week to 2 weeks to 2 months. I don't know. I think January 20 will be for tell sign with the election outcome. But however, in the long term, though, I don't think this is the end for the silver market. And a big indicator for that is, as I said, these stimulus is going to come they're burning $1 trillion every couple of months. And even before this bill is passed, I think there's rumored a $2.7 trillion stimulus package. That's already being discussed. So, and then from the technical side, the big indicator I would say is the gold to silver ratio, as we covered during Silver Fast. That when the silver peaks at the bottom of the gold to silver ratio at around 35. So right now, gold to silver ratio is around 70, and there's a bit of a congestive area on gold to silver ratio at 70, and which is a bigger historical norm. And so it just tells me that the gold and silver are in a relatively balanced market. So even though there's maybe some short-term exuberance on the silver market, I think in the longer term, we haven't reached that mass critical sort of hysteria sort of a scenario quite yet. But I'm just saying that in the next, from now to January 20, we could see a lot of volatilities. And 27.5 is a very critical level. And you got to take 27.5 out emphatically. I'm talking like on the COMEX open at 8:15, right? Leading up to like 10:30 Eastern, you got to just take it out with a lot of volume. I would not to put too much thought into sort of these sort of Asian open at a 27.5. I mean, especially with the rising dollar and falling Australian dollar and a wobbly equity market, it's not the formula for a convincing takeout by the silver market. A lot to digest, Chris. You can tell I'm well prepared today because I had a good dinner.
Well, that's the key to greatness. And yeah, I know what you mean, where it's like, wow, it hit 27.60. And then when the market opens, it's down to $25 in the next 10 minutes. But be interesting to see how a lot of these levels unfold. Speaking of which, John, I mean, as the viewers know, I'm not a big technical chartist, so that's why it's nice to run this one by you. Yet I have thought about silver hits $50 in 1980.
Yes.
And then in 2011, I mean, most people quote it as 49, let's say. I don't know what the actual futures hit, so maybe it did touch 50. But just as I think about that, here it is, 41 years later. Now the debt, money printing, any sort of fundamental reason is wildly in excess. But I mean, it didn't go up to 45 or 54 or 30. I mean, just the exact same level, which makes me wonder, I would think from what I hear technical guys say, that would be a resistance level. So the point being, let's say silver goes like through 50 at some point. Would you expect like a big gap up? I mean, that would kind of be historic, almost like when gold finally went through that 1920 high, and when it went through 2000, it shot up. Now it's since come back then, but again, I don't know. I think we're both believers that silver will see $50 again. If so, what do you think happens when that goes down? What does that look like?
Yeah, Chris, I don't look at silver by itself per se. As I said, there's a lot of sort of intermarket relationships that are at play. You know what? In 2011, silver when it's past 30, went to 50 in a hurry. It could have gone to 75. Could have gone to 100. I highly recommend the audience watch the movie called Adjustment Bureau. So as the event unfold, you don't really know. Nobody knows. The next step will be heavily predicated on what's happening sort of at the moment. And so once silver go past, I would say one other thing is if you look at the fundamental versus technical sort of dilemma, is in the end, it's the physical market that drives the bottom, and it's the speculative demand that drives the upside. So what I mean by that is I wouldn't be discouraged just because the silver is influenced by the divine power. But if you have continued strong physical demand, which I think I know is happening, and so you're gonna so you're gonna see continued higher lows for silver I definitely believe so. Until to the point it's going to take out the critical resistance level, then it's going to sort of going on its way up. I don't know the answer to your question, honestly, Chris. My point is, well, you can see already the days where the commercials are off to lunch, right? Off on holidays. Literally, silver just go and it's nonstop. There's no stop. So I think if the market would have left its own device, silver would have easily passed 35 to 50, maybe 100 already. Gold would have been 1,800 to 2,025, just like the path of Bitcoins. But because there's been suppressed, and then the speculators are picking other markets. They're like, hey, why do I want to go against the power that be, right? They're easier, lower hanging fruit. So I think the technical is going to drive a lot of the. To investing in market today without technical is, Chris, you're flying blind. Like, look at WTI going negative 20, right? You'll be averaging in like the USOs until you lose your shirt. Oh, everybody's gonna use oil. It cannot go to 20, and everybody's gonna oil. It's not gonna go to 10, and COVID is gonna, eventually go away, and oil is gonna worth something. So I can buy at 5 until you totally lose your shirt. So I'm just saying, for silver, yeah, it could go to, could it go to 22? Absolutely. Could it go to 18? Well, it's a possibility. So we just got to prepare for that. And that's why I don't use options personally. And if I were to use margin, I just make sure I have ample margins that are available, or just don't use at all. So, go back to your question about $50 silver. I don't know. I got to look at gold, for example. If gold is at 3,000, silver is at 50, I say piling double up on silver, right? And the same with Dixie. If Dixie is at, say, 70 and silver is at 50, I would say, hey, look, you want to lighten your position. But if silver is at 50, Dixie is at 110, I'm like, okay, then you can continue to go. And so there's a lot of different sort of, and then you look at Bitcoins. That's another thing. If Bitcoin is 20,000 and silver has a 25, I would say it's a very low risk proposition for silver.
Yeah, that's interesting. You mentioned that because there is a lot about the context where when people say, well, when do you sell your silver? Well, it depends on how a lot of other things play out. I don't know. Maybe if silver is at $70 and real estate has crashed, then that could be a great time to pick up a house.
Absolutely
different for every person. Although I think it's not to say there aren't times where maybe someone does want to go back into a dollar if they have a right plan behind it, but just introduce these things as something to consider and think about what's best for each person. I guess the other thing you mentioned there, John, was about how it does silver. I've had a lot of folks mention that in the end, what's going to drive it probably is investment demand, which we've seen a lot of this year. And I guess it's just hard for me to see that changing when, like, every time the Fed does a press conference, it's like, oh God, what's he going to do next? I mean, it's almost like they tried that inflation targeting thing, which I think they said 4%. I think it was almost so asinine. They're like, wow, maybe this one was pushing it too far. They're going to giggle at. You haven't heard more about that, but it just seems they are guaranteeing that no matter what happens, it's like if, let's say the S&P is down 2% tomorrow afternoon, what are the chances Powell's not running to the office to start buying something new?
It's already happening, Chris. And if you look at on a Friday, S&P was very perilously hanging on some critical support level, and all of a sudden, miraculously, the market, the last minute of buying continues through to aftermarket. Who will buy a position, huge, massive position, the highest in the last 3 months in futures trading on a Friday evening after 4:00? Doesn't make any sense. And the talk about being more flexible on inflationary target and also permanent interest rates is because of, as I said, you try to separate the politics because it's very polarized. We don't talk much about it, but it has everything to do with the politics because of the election that's coming in a month, and the power that we have to keep the markets resemble some sort of normalcy. And then also then you have in gigantic positions by the CalPERS, the pension funds, and all the pension liabilities with all these assumptions on returns, and they go completely insolvent if there's a correction in the equity market. Same with the treasury market, right? Because if there's 70 debt, 30 equity, and of which debt is yielding at 0, and then If you have interest rate that go up 1%, well, Chris, you're a trader, then that means that you got a 30% haircut on your treasury position on your bonds if interest rate doubles. Well, that would absolutely destroy the fixed income market, of which then by just going on the path, all the pension funds are. I mean, you're gonna have a civil war if we're not in already practically, and not just that, it's just not in the cards. So, and then which means then the path of sort of the only viable path is keep printing and hope for the best and suppressing the market sort of on the gold and silver and just kick the can down the road and see what happens. And
yeah, of course, it's the American banking way. And I don't know, maybe we can make T-shirts thanking Jerome Powell. He's the silver put. You had the Greenspan put, but for the silver investors, Jerome Powell is your put option. He's providing portfolio insurance, guaranteeing. It's just hard for me to see any outcome which these guys don't respond with printed money.
There's no, and you can history clearly show from the Weimar Germany to Brazil to all these countries. And you know what, Chris, on the same subject, that the fact that Bitcoin's at 20,000, it just shows the frustration, the pent up, right? All that money is supposed to go to gold and silver. Eventually, the specs are going to come. They're indiscriminate. They don't have allegiance towards particular investment class. You have all the tech funds, Renaissance Technologies, and all these funds that are they're multi-directional. They do whatever they want. They're all algo trading, right? So as soon as every time there's a resistance level is being overcome, you're just going to get more buying. And sooner or later, the commercials will be out on vacation. And in the end, Chris, commodity markets spend 1 year going up, 10 years, 7 going sideways. You just want to capture that window where the folks are out to lunch, and then you just maximize your gain at that time. So it's going to come. There's no question in my mind. Just a matter of waiting for the water to build it to the dam to the level where it's just going to take out those levels, and we'll be run 27.5. We're almost there, and we can easily do that again very soon.
Yeah, and I think kind of like you pointed out there, and this is not legal financial advice, but just my thought is that, at least to me, silver, if people can learn to accept the time frame, which is a bit unknown. I mean, it seems like from a long-term perspective, if you get that, it's as close to a layup of a high ceiling, high probability of hitting that ceiling, is my opinion. So anyway, John, perhaps you could give us a quick update. I know you're running Silver Elephant, and for people that do believe that silver is going to move, looking for leverage on the move, obviously Silver Elephant provides one way of capturing that. Can you share what's going on there lately? Any updates?
Yeah, well, Chris, we had a banner year for Elephant. We're the busiest year on the company's history record. We acquired 3 projects. We put some good drill results. They're step outs and they're not infill drilling, of which people can do and get good results all day long. So the crew is very busy. We're setting the drill pads, and we could be drilling. We'll try to push for drilling by the end of the year, but maybe in the early next year. We have 3 bona fide assets, and in addition, our flagship Pulakaya has over 120 million ounces of silver. So that has a underpin for our valuations, and we have upsides of our 3 projects altogether, 120 kilometers of square kilometers of their prospective land, of which less than 10% had been explored. So we're super busy. We just closed a $9.2 million financing with Sprott Capital, Canaccord, and Maggie. So we're transitioning from retail promotions such as yourself, who's been doing great, but to upgrade that into institution coverage. And our volume is trading great. And the stock for the technicians out there, and then just go to, again, my Twitter, you can see some charts they're consolidating on a very well defined descending channel, and that spells for eventual breakout to the upside. And once the resistance level 50 cents is overcome, the sky, I think we have a lot of blue sky coming. We had about 20 million warrants that were exercised between July and October. So all those 20 million warrants have gone. We don't have any warrants that are expiring in the next 6 months. So we're going to look for a fantastic year. And in fact, we look into it. And last year we did 3 M&As, and this coming year we may be doing a few more. I think the last thing is you would expect out of Elephant is a doldrum for the company. So super excited. And just one last point, Chris, is again, I will caution investors. I had a personally, a 7-digit well over portfolio that went to literally ash, right, in 2009. I was eventually, while it's very fun to play drill hole stories, and I'm not talking down these stories, and I own shares on some of the guys that are featured on your channels as well. But in the end, when the times get tough, it's only the assets, the companies with real assets, with resources, with real assets that's going to prevail in the end. So I would just say in these uncertain times, I would actually upgrade my quality rather than looking at bargains. I like, okay, this guy's the lowest 52 moving average and this guy's too high, so I'm going to average in, right? Well, you can average into obliviation. It's happened. I'm sure you have those stories to tell too. So you gotta look out for companies with intrinsic value. And secondly, deleverage. And then third is keep your core position, because again, the top is only known in hindsight. So we're definitely not 20% from the bottom. The bottom was in July. And but the top, I don't know. We're definitely not from the top. But in the meanwhile, we could be around 22 to 27.5 for a while. And so I would just say, I wouldn't be so cute about calling the bottom or the top, or try to scale in and scale out, because if you miss the train, you miss the ride. You saw what happened on Monday. You could gap up 3% and gap up again 3%, and you're gonna lose it mentally, and your wife's gonna kill you.
Well, obviously, silver investors, I think we know that we want to keep everyone in the family happy. Obviously, please at home, I know, appreciate everyone who's watching. Do things responsibly. If you're not, good rule of thumb, John, would you agree? If someone's afraid to tell their wife about it, it probably means they're over leveraged, they're doing it too big, is one way of looking at it.
Well, I gotta think about what I haven't told my wife yet, so I'm not in position.
All right, don't answer that one, perhaps. But John, maybe final question. Can you just let folks know the website and how they can contact you? So if they'd like to take a look at the assets, see what you have there, and get some more information, what's the best way to do that?
Yeah, always a pleasure. The website is silverolive.com. You can just Google Silver Olive, and we're very active on YouTube, on LinkedIn, on especially Twitter. Thanks to you, Chris. My Twitter account is about 700 from less than 200. And there is a wealth of information that I put up on my Twitter page, of which, it's my over 20 years of experience in looking at and trading and investing in the silver market. We're in wild times, and I'll just say now is actually the time to study independent from the market. You can see from the sort of the media, the mainstream media have a lot of ulterior motives. It's time to take control of your destiny, Chris, sincerely, to looking at different investment options. Be active in talking to the company that you invest in, and stay away from the traditional 80-20 bond versus equity and domestic 80% versus whatever, right? 10%, the traditional 10% foreign, whatever they are. I would just be more active in looking at your portfolio. And now is the time to do that. Critical time.
Well, I think that makes a lot of sense. And actually, I really love what you're saying there, because, yeah, I mean, there's things in the world that aren't ideal, but when you get past what we think should happen or what's fair and just make the best of what's out there, there is opportunity. And anyway, appreciate you joining me again. And for folks at home, fortunately, John has recorded profile interview about the company, and you don't have to go anywhere because it is coming your way now.